Okay, so lesson 5.4 is petty cash. So we're going to establish a petty cash fund, prepare a petty cash report, and replenish a petty cash fund. Okay, so the amount of cash kept on hand used for making small payments is called petty cash. So these are things like maybe we buy a stamp. We're not going to write a check for that. So we're going to take a little bit of cash out of this petty cash fund and use that to pay for it. Petty cash is an asset account, so we have a normal balance of debit. Our increased side is debit, our decreased side is credit. So to establish this, we write a check. So the transaction is paid cash to establish a petty cash fund, $100. We're increasing the asset petty cash. We're decreasing cash as a credit to cash. Then we record just like normal. Write the date in the date column. Write the amount of the debit account title on the first line and the debit amount. The second line, we're going to indent and write the credit account, in this case cash, and the credit amount. And then the last thing we do is we write the source document C8. Now, every time somebody makes a payment from our petty cash, they just don't take the cash out and forget about it. We still have to record that. So they're going to fill out a petty cash slip saying what was this for, what dates, things like that. Okay, they also should put the receipt in there as well. So they're going to record the date, who it was to, what it was for, the amount, and the account it should come out of, and then who approved it. The petty cash on hand amount that is less than the recorded amount is called cash short. So if we add up the receipts, we subtract it from our original amount, and then we count up the cash. If that cash is less than what it should be, that's short. And then the reverse of that is petty cash on hand that is more than the recorded amount. So again, we added the receipts up, we added our cash up, the cash is more than what we should have, that is a cash over. And the custodian prepares a petty cash report that the petty cash fund is to be replenished. So here's that report. Again, we're going to record the date and who's the custodian. We're going to say what was our total fund to begin with. Then we do our payments. We take those payments, add them up, and put them on the next line. And then that should be our replenished amount, so we move that over. Okay, we subtract our total amount that we used minus our original amount, and that gets our amount that we should have on hand. Then we count the cash that we have. In this case, it was $65, and we subtract that from the original amount, and we find out that we're $1 short. Okay, so we move that dollar over, and we add it to our total payments to get our total amount to replenish. Okay, our account title cash short and over. It's a debited when the cash is short, credited when cash is over. This balance is weird because it could either be a debit or a credit. Usually going to be a debit. The petty cash fund is more likely to be short than it is to be over. Okay, so to replenish the petty cash fund, we paid cash to replenish the petty cash fund, $35 towards miscellaneous expense, $20 to advertising, $14 to cash short and over. That was $1. Okay, so check number 11. So we have miscellaneous expense $20, advertising $14, cash short and over $1. So they're all debited. We add those over and we get the amount of cash credit. Okay, so we bring the date, put it down here. We put all of our debit, especially the two that we have from our report, and write that debit amount. We put the cash short or over. In this case, it's short because it's a debit. And then we put our cash credit, that's our amount to replenish. And then our source document C11.